In personal wash, if you really see, I think there are two things which are playing out. One is that the overall market growths have slowed down. And if you see the last quarter, the market growth has actually been negative. You would also recollect that we had taken some actions to pass on the benefits of commodity reduction. So we had reduced our prices. So a combination of those two has meant that our headline growth numbers have been lower. Given the current outlook of the oil basket, we will be actually taking up prices in March quarter to mitigate some of the impacts of the inflation. In skincare, I think it's been a story of two halves. While we have seen good growth in the non-winter portfolio, delayed winter in many parts of the country actually impacted our skincare performance. This is transitionary. We remain continued and committed to investing behind our brands. We are stepping up focus on our innovations. We are stepping up focus on premiumization and in market execution. In the quarter, we launched Love Beauty and Planet, L18 body lotions, and new variants in Vaseline. Hair care actually registered good performance with growth across the portfolio. During the quarter, we brought to the market our shampoo and conditioner range of Love Beauty and Planet and launched Indulekha Neem Raj oil to really address the anti-dandruff problem. Color cosmetics continue to tap into new opportunities by unlocking the rising aspirations of women across the countries. Oral care delivered a steady performance led by Closer. Foods and refreshments, if I look at our third division, actually delivered an 8% robust growth, and the growth really being broad-based across our categories. Beverage did well, both our tea and coffee parts of the business. In ice creams and frozen desserts, we continue our focus on distribution expansion and building an innovation pipeline ahead of the season. Foods delivered a good growth led by sharper activations based on differentiated consumer insights. You'll be glad to know that in this quarter we brought to India the globally well-known and loved brand Hellmann's by launching Hellmann's Mayo in Kolkata. If I give you a quick view of our 9 months performance, for the 9 months performance ended 31st December, our domestic consumer growth has been upwards of 6% and our EBITDA growth upwards of 14%. And our net profit actually is up 16%. I think it's a testament to a very good performance both from a top line and a bottom line perspective. I think it's also a demonstration of the strength of our brands. It's a consistency in strategy and our execution prowess. If I look ahead, I think market growth continues to be sluggish and demand outlook is challenging. Commodities and currency will continue to be volatile. I think our strategic priority of building a purpose-led and a future-fit business, coupled with our reimagining HUL positions as well, to unlock the structural long-term opportunity in the FMCG sector while navigating the short-term challenges. Yeah, thank you.
In personal wash portfolio, you said that you're going to hike prices in March.
Sure.
So this will be in the soaps category, and to what percentage will you be hiking prices?
Okay. I think it's good to give a context of what had happened earlier. If you see it about 6 months ago, the commodity had come down significantly. If you really look at what we call as an oil basket, which used to be around, give or take about 58,000 to 62,000, that's a combination of various things, actually came down by about 20-25%. Yeah? So it also meant that it was the right thing to do, and we passed on the benefits to the consumers. Typically, if you see today, both palm and the various derivatives have actually inflated by upwards of 30%. Yeah? It's only natural that you will have to look at really, passing on some of this commodity. While we always continue to be judicious in terms of how we manage pricing, we will do all of that. So we will be looking to take some from prices, and it will come through in a phased manner. We are looking to take up prices around between 5 to 6% is where we are really looking at from a pricing case perspective. But it's going to be across the portfolio, measured using the lens of really using strategic pricing, and we'll actually use a WIMI lens as we go about doing it.
And this is only soaps?
This is pretty much in a soaps part of the portfolio, yes.
The global tea business. What does it mean for HUL and the tea business here?
You know exactly your question. What Unilever has said, that they are going to undertake a review, and this should take about 6 months' time. So let us wait for Unilever to complete the review.
And here be part of that review as well?
Oh, as part of the review, they are looking at a global tea business.
Okay. And here will be included a review of particular brands, and their performance in India will also be included.
Yes, that's what Unilever has said, that it is going to be a review of the global tea business.
So the point I think Sanjeev is saying is review doesn't mean that a
Review
decision has.
doesn't mean any decision has been taken. I think we should be very clear about that.
Yeah.
Yeah, it's just a strategic review. That's what Unilever has indicated. Because they've also said that in developed markets, the black tea market has not been growing, and that is the reason they are doing a review.
So the delayed winters actually caused an impact on the beauty and the personal care business. Now winter is also strong during this quarter. Will that have an impact on demand for winter products, because that is also margin for
So there are two interesting dynamics which work here. Yeah, when you have a delayed winter, typically what happens? Winter runs at a certain course of a certain time period. In anticipation of that, trade ends up upstocking, right? And that's the right way to do it. So typically you end up selling in about September and October. That's when you really have most of the stock going out into the market. And that helps you really run through a winter which starts from an October and goes on till about February and March. So every time you have a delayed winter, there is always an apprehension in terms of when is it going to come and whether it's going to be, as intense as you would expect it to be. And trade is always wary about holding on to the same level of stocks. So yes, winter has come back in some parts stronger. Having said that, in some parts it wasn't the same. There'll always be a trade dynamic. To that extent, you will not be able to get the full stocks going back in. So I think that will have a bit of an impact for us. So sometimes when you have a delayed winter, it's not possible to go back and recover everything which happens to you if it were to run normal. And that's true of whether it is winter, that's true of whether it's also of summer. That's how some of the dynamics play out in our categories.
Sir, this is the quarter that went by, rural continued to decline, but even urban, which actually held steady for most of the, actually suffering, also saw a decline. Now, do we see urban continue to decline, the growth rates in urban continue to decline from here on, because you are focusing on premiumization? What is the impact that it will have if urban also continues to decline?
First, let me be very emphatic. Rural is not declining.
But in some west and north is where we still see
Yeah,
stress,
what
right?
we are saying is that the rural growth rates have come down and so have the urban growth rates come down. But we are not anywhere close to declining because the markets are still growing on a total national basis in the vicinity of 3%.
Between the growth.
That has come down, obviously.
So what
Like we always portray that when markets are robust, rural, because of the low penetration, they grow anywhere 1.3 to 1.8x the urban growth rates. Right now, as Srini talked about, the rural growth rates are at about 0.5x the urban growth rates.
Do we see that reviving in this quarter? Because
See, it is difficult to tell the time, but we are absolutely remain confident about India's mid to long term story. No question about that.
companies indicated that start seeing green shoots. I want to understand on the
Yeah.
have things improved
No.
or have they worsened, or in terms of this approach or stance, where are we right
See,
now?
the December quarter growth rates were lower than the previous quarter.
The growth is
The growth has declined in December quarter over the previous quarter. That's a fact.
so it means when people talk about seeing green shoots or something, doesn't seem likely.
At this stage, we have not seen a turnaround happening. Okay, that's still not visible. But let us wait. A lot of policy measures have been taken, hopefully will be taken, which should help the categories to turn around. And there are, like we always say, there are two important things in consumer goods. One is more money in the hands of more people, and the second is consumer confidence. So both are important things to help turn around the consumption of consumer goods, especially FMCG in the country.
But we're only talking about both rural and urban.
Absolutely. Because urban also has slowed down. Both have slowed down, but the deceleration of growth rates in rural have been much more than urban.
Isn't much more income in the house? personal tax?
You know,
returns?
it's just one day away. No point in speculating. Let's watch the news
It's
tomorrow.
not speculation, but what is it that?
No, we would, like I said, we are absolutely clear. Our expectation would be that more money in the hands of people are put in so that the consumption starts. And we also believe firmly that as a nation and as corporates, we should do all that is required to boost the consumer confidence. Because confidence is psychological, and when there is a hope for a better future, consumers start spending more. So we should not get into a doomsday kind of trap, and that is the reason I was very emphatic in correcting that there is no degrowth. Yeah, growth has slowed down, but it is still growing. And just look at it also from a lens that we are a big company, and we are still growing volumes at 5%. So there is always hope, and we are absolutely confident and optimistic that in the medium to long term the growth will bounce back.
Because of different channels of distribution, clashes between them, solution that you're looking at, are you looking at an SKU segregation between modern trade and general trade, or are you?
We have always had a large pack, a large quantum of packs that go in channels are distinct. And for instance, sachets are sold only in general trade. You won't find sachets in modern trade or in e-commerce. So we have always had a strategy where channel specific packs we have for a large part of our business. And not only that, we design for channels.
Will there be a brand bifurcation as well that you would look at?
Not necessary. There could be certain brands when you launch. For instance, we have launched Love, Beauty and Planet. Yeah, right now only it is in certain specific channels. Similarly, when we brought in Simple, it is in certain specific channels. So it's a very strategic move, because you look at it from a lens of who are the early adopters, and we would like to go for that particular brand in a channel where you will get early adoption. And when you reach a certain point of inflection, then you expand it to other channels. But it has to be relevant for that channel.
We see price-led growth coming about right now. Over the last 2 quarters, we've seen 5% volumes, but of course, you've seen an inflation.
So I think let me just take you back. So even previous quarter we had UVG of 5, we had 2% pricing, so we had 7. Even in the prior quarter, it was very similar. We had a UVG of 5 and we had 7. Even if I were to deconstruct my 3 divisions, in home care I have seen some pricing benefit. In my foods and refreshments, I have seen some pricing benefit. It's only in beauty and personal care, and also because of some of the actions we took to pass on the pricing in skin cleansing, that we did not see price growth. There was also a little bit of trade intensity, which also meant that you had to put in some bit of TTS went up, which comes above the line. Therefore, that's depressed. So the question is, it's not about price growth coming back. I think there are ample opportunities if you play it sensibly between volume and price. And that's how we'll always continue to manage. I don't think this is a market where you need to talk about either demand. Yeah, demand can be better, but there is demand, there is growth, there is pricing. If you have the right portfolio and the right reason, there is also pricing. So I think that's how we're really managing this business. Yeah, so I think we talked about it. The NCLT proceedings from a HUL perspective got completed. We have the orders. The GSK side of the NCLT proceedings are in progress. So there is a hearing scheduled for early February. We are hopeful, but NCLT will take its time to go through various aspects. We are hopeful that they will pass an order quickly. Fingers crossed. We are all getting ready to really say how do we get GSK into the fold and really run the business. I guess now we're closer to it. Now whether how long it takes is going to be a matter of we need to allow NCLT to complete the formalities.
Innovation can you launch when how these in terms of your revenue by in terms if you could help us
or the kind of revenue that your innovations or new product percentage?
You know, we don't give percentages of, especially when we have new launches. We track it very closely, yeah, all metrics, but we don't put it in public domain. But I think what important point you raised is that despite the slowdown, you're still going ahead with innovation. And that's absolutely correct. Our strategy does not change just because there have been a few quarters of slowdown, because we believe in the India story and we adjust the sales, but we don't change the strategy. So innovations, you will still keep seeing them coming out at regular intervals. We have a very robust pipeline of innovations. Yeah, Ayush continues to do well in south of India. If you remember, yeah, we had launched nationally, then we did a strategic course correction, and we said, let us focus on part of India as part of our WIMI strategy. So in the southern clusters, it continues to grow in a very robust manner.
Within oral care, it's doing well in south.
Absolutely.
That's coming.
Absolutely. Oral is one of the key leg of the Ayush portfolio.
So what's the rate at which Herbal and Ayurveda?
2x the growth rate, absolutely.
Last time it was premium product. A little bit last time. Is
Exactly.
I'm hearing from a lot of people is that a lot of brands are actually using premiumization, capture sales at this point. Sounds largely in.
See, for us, premium is not a tactical move. For us, premiumization is a strategic move. And the good bit is, because India is a vast country, right? And that is the reason we went in for winning in many Indias. So there are still pockets where the demand is robust. And premium brands are still growing at a rate faster than rest of the portfolio.
Pricing or margins that, or discounts that are given to different channels?
You know, that exactly, that's the question she asked. And what I said is, for us, we have little channel conflict because a large part of our portfolio is designed for specific channels. You know, just like sachets are mainly sold in the groceries channel, whereas you won't find them in modern trade or e-commerce. So our focus is that we design products, pack sizes for specific channels. Similarly, we also bring in brands which are specific to a certain channel at a point of time. Just I gave two examples, Simple, which we introduced only in e-commerce, and Love, Beauty and Planet, which we launched a short while back, is mainly in modern trade and e-commerce.
But so what happens with cash and carry segment? Because yes.
No, in cash and carry also we are very clear about what SKUs will be sold in cash and carry, because we believe that cash and carry should be complementary to our existing distribution channel. So it has a role to play, but it has to be a complementary role.
So how is demand right now for?
No specific comments. I think it's continuing in its usual course. I think there's nothing specifically to talk about CST. Yeah.
CST still remains a very important customer for us.
Yeah.
Has and it will remain.
So we've said that it ranges between 15 to 17%. It's not a material shift. Depending on a quarter, it could be a little higher or a little lower. It's continuing to grow well. And I don't think at a total level it's materially changed.
And modern trade continues to grow at a rate faster than business trade. Right?
Yeah.
Thank you very much.